Hello investors, my name is Dehan and welcome back to your number one place for all your investing needs. So guys, in today's video, we're going to be discussing the Tesla stock. So we will be going over some analytics, the revenue for Tesla, all of the Tesla factory plans, and the S&P 500 inclusion obviously. Now all of this is going to be in order to see if Tesla is a good investment right now, and if that interests you, take a seat, continue watching this video. Now, if you're new to the channel, go ahead and click that subscribe button. Make sure you turn on bell notifications so you get notified every time I make a new video. We are very close to 10,000 subscribers. We're only about 100 subscribers away. Also, go ahead and smash that like button for me. Let's get 100 plus likes on this video. One like equals one Tesla short, losing gains out there. Also, leave a comment below. What are you guys' thoughts on Tesla going into the S&P 500? Do you think it's going to continue higher, or do you think it's going to fall? Now, let's get into the video. Alright, so first off, let's just take a look at the price action and what's going on with Tesla in the past week. So if we guys take a look right here on Monday, obviously, it was trading at around $408 at the close. And then we had this huge jump right here on November 17th right there. Boom, it went from $408 all the way up to about $459. Really big gains right there. Obviously, a lot of volume picked up right there. A lot of volume pushed the stock all the way up there. We consolidated a little bit and pulled back down a little bit from that high, and then we continue to go up every day. On Wednesday, we continue to go higher and higher. We hit about $480 on Wednesday. We pulled back again, and then on Thursday, we made another high right there, about $505. And actually, we hit a high, all-time high for the 52-week high of $508.61 on Thursday. And then we pulled back, and today we were down about 1.93%, or about $9.66. And we closed at about $490 per share. So do I think that, Tesla can continue to do this? Well, we'll find out. We're going to discuss that in this video right now and go all the details. First off, we're going to go with the newest news that just came out today, and then we'll go over how they joined the S&P 500, how that's going to affect the stock prices, and just the overall outlook on Tesla. So this news came out today on November 20th. So this says Tesla S&P 500 entry could spark a $8 billion buying spree, and that is what Goldman Sachs says. So let's take a look at this article and see what they have to say. So large cap mutual funds are on the verge of fueling a massive rally for Tesla shares, Goldman Sachs said on Thursday. The automaker is set to join the S&P 500 on December 21st as one of its 10 most valuable members. Of the 189 large cap core funds tracked by Goldman, 157 funds managing roughly $500 billion don't yet hold Tesla stock, the bank said. If funds aim to hold Tesla at benchmark weight when it joins the index, they will buy about $8 billion worth of shares soon after the automaker inclusion, Goldman added. Wow, that is huge news right there for us. That means a lot of money is going to be poured into the Tesla stock, and these ETFs are just going to be buying it up. So Tesla's planned inclusion in the S&P 500 already lifted shares through recent sessions, but Goldman Sachs sees a tidal wave of mutual fund cash fueling another rally in December. So as you guys know, December 21st, that is when this could potentially happen, around this date. So after the 21st, we could be seeing some massive gains for Christmas, and that would be a great Christmas present for all of us, obviously. So S&P Dow Jones indicates revealed on Monday that the automaker will join the benchmark index on December 21st, obviously, with a market cap of roughly $473 billion. Tesla will enter the index as one of the 10 most valuable members. Now that is something to really think about. I mean, Tesla is just joining now, and it's one of the 10 top most valued members. That just shows you how powerful and how big Tesla really is. And we've been waiting for this moment for a long time. Obviously, the requirements for them to join was they needed to have 4 quarters straight revenue, profits, and they obviously did that now for 5 quarters. So the news ended months of speculation as to when the automaker would join the index, and bullish investors drove shares about 13% higher the day of the announcement. Yet some of the market's biggest players haven't even piled in yet. Large cap mutual funds tracking the S&P 500 waiting on the sideline can fuel massive demand for the shares once Tesla officially joins the index, strategist led by Arjun Men said on Thursday. Now, like we mentioned, out of the 189 funds, about 157 do not own any Tesla as of September 30th. That's what the team said. Now, those funds are set to roughly buy about $8 billion worth of shares, obviously, assuming they aim to hold the automaker at bench weight. They added, obviously. So Tesla became eligible to join the index in July after reporting its 4th consecutive quarterly profit, which I mentioned. Obviously, they needed to do it 4 quarters in a row, which they did. The S&P 500 requires members to be based in the U.S., trade on the New York Stock Exchange, the NASDAQ, or CBOE, boast a market cap of at least 8.2 billion, which Tesla definitely does, and post 4 straight quarters of profitability on a GAAP basis. If all criteria is met, a group called the Index Committee deliberates on whether the company should replace a current member of the index, and obviously they have not revealed which member is going to be removed from the S&P 500, but obviously whichever company it is, it's going to be bad news for them. Now, the automaker's inclusion comes as some of its most notable skeptics turn more optimistic towards the company. Morgan Stanley upgraded its rating on Tesla to overweight from equal weight for the first time since 2017 on Wednesday, saying its software and services businesses present strong growth opportunities. To only value Tesla on car sales alone ignores the multiple businesses embedded within the company and ignores the long-term value creation arising from monetizing Tesla's core strengths, driven by best-in-class software and ancillary services, the bank analyst said. Tesla obviously traded at $495.62 per share as of 10:45 a.m., which is roughly about 501% up year to date. The company has 22 buy ratings, 41 hold ratings, and 20 sell ratings. So obviously, a recap of that summary is pretty much these analysts are expecting billions and billions of dollars to be thrown into Tesla stock once it joins the S&P 500 in December. Now, next up, we're going to be discussing their factories. So obviously, Tesla has their Giga Berlin. Now, obviously, that one is going to start hiring in January with about 7,000 jobs. So we have Giga Berlin, and obviously we have Gigafactory Shanghai, which the expansion is back in full swing. Massive, massive buildings. If you guys go on Google and just look at some of the images of these factories, they're pretty big. And then we have obviously the Tesla factory. So this one is going to be in California. So Tesla's factory in Fremont, California. If you guys want to come in over to this website and read, you can go ahead and read some of that information that they have right there. Here's a little map of what they have is right there. As Tesla continues to deliver more and more vehicles to customers around the world, we always aim for the highest possible level of vehicle craftsmanship with every Model S, Model X, and Model 3 built in Fremont, where the vast majority of the vehicle's components are also made. So that is right there, the first one. Then we have the Tesla Gigafactory. So this one, look at this, beautiful, beautiful picture. So this one is going to be in Nevada. So this one is in Nevada right there. And Tesla, right there, if we take a look, the Tesla Gigafactory was born out of a necessity and will supply enough batteries to support Tesla's projected vehicle demand. Today, the Gigafactory produces Model 3 electric motors and battery packs in addition to Tesla's energy storage products, Powerwall and Power Pack. So right there, we have that one. If you guys want to come also to the website, you guys can watch this video of it and check that out. And then we have the Tesla Gigafactory 2. Now this one is going to be in New York. So this one is going to be right here. Tesla manufactures infinitely scalable clean energy generation and storage products, solar panels, solar roofs, and Powerwall home batteries, and the Power Pack battery system for commercial and utility scale sites. These products make use of the most sustainable energy source, the sun, in 2017. Tesla began production of the solar cells and modules at Gigafactory 2, a 1.2 million square foot facility in Buffalo, New York in 2019. Tesla added new production lines that will support electrical components for supercharger and energy storage products. To date, Tesla has created nearly 800 jobs at the Gigafactory 2 and continues to ramp operations and production at the factory. Well, obviously, this is amazing. In line with the agreement with the state of New York, Tesla will create 5,000 clean energy jobs in the state over the next 10 years, obviously, many of those in Buffalo, making the city a hub for sustainable innovation and advanced manufacturing. So those are going to be the factories, the main factors we're going to be discussing. Then we're going to look at the cars. So they have obviously the Model S. The Model S is a beautiful, beautiful car. So it can go from 0 to 60 in 2.3 seconds. Now that is super, super fast right there. The battery range, obviously 402 miles is the range. And then we're going to take a look right here. We have the Model 3. So in the Model 3 right here, another beautiful car. This one can go from 0 to 60 in about 3.1 seconds. The range on this one is about 353 miles. And then we're going to take a look at the Model X. So now we're getting into the bigger and better ones. So Model X, 5-star safety. Look at this video. The doors open up right there. We have room for 7 on this one, and the range on this one is about 371 miles. And then, last but not least, we have the Model Y. So the Model Y right here, 326 mile range, Dual motor right there. Beautiful, beautiful car. Obviously, we have some other big things coming up like the Cybertruck and many other things that, Tesla is trying to do. They have cut prices as well. That is another big thing that Tesla has done. They've cut prices in order to, compete with some of the other competitors, especially these Chinese companies that are coming out like NIO and XPeng, Li Auto, and many others that are trying to compete with Tesla. Tesla has to do everything they can in order to compete with them. Obviously, we have the solar roof. So solar roof is also another thing that Tesla does. Beautiful solar without compromise, stronger than standard tiles, 3 times stronger, pays for itself over time. So, this is beautiful, clean energy. Replace your roof with a, Tesla solar roof. That is beautiful to see. Then we obviously have the solar panels. So solar for existing roofs, obviously converting the sunlight into energy, guaranteed the lowest prices, they say, and energy monitoring 24/7, only at $1.49 per watt. Lowest cost in America, money back guaranteed, obviously. So these are some huge things. People think that Tesla is just about the cars, but they're in this solar business, and they're, top competitors up there. They're doing a lot of big things that people are not actually thinking about. Everybody is so focused on their cars and their revenue from that they're not even looking at their solar panels and their batteries and all this other stuff that Tesla is doing on the side, and that is actually might even be even better than the cars in the future. You never know. So thirdly, we're going to be discussing, their earnings and how that is going to predict pretty much the future for us in the next few quarters and years to come. So we're going to be talking about the Q3 revenue and what happened with the earnings. So if we take a look right here, Tesla shares jumped about 5% after reporting 5th consecutive quarter of profits. That is what happened on October 21st, 2020. So obviously Tesla reported third quarter results, including net income of 331 million on revenue of 8.77 billion. Elon Musk's electric car maker previously reported deliveries of 139,300 vehicles for the period ending September 30th, 2020. So obviously right here, the stock was up on after this day. So earnings per share was 76 cents versus 57 cents. Revenue was 8.77 billion versus 8.36 billion. And then the net income was 331 million versus 394 million. The company reported that it delivered 139,000, like we said, during the quarter, a new record for Tesla, which is huge. Automotive revenue comprised 7.6 billion, about 91% of the total for the quarter. Automotive gross margins, excluding regulatory credits, rose from 18.7% to about 23.7%. Tesla raked in 397 million in regulatory credits during the quarter, nearly doubling the amount it made for those green credits years over year. Now, operating expenses jumped 33% from last quarter to 1.25 billion as Tesla embarked on building new factories in Austin, Texas. That is one we did not discuss since it's not, obviously yet built. It's being built right now. That factory is going to be in Texas. And obviously, the Germany one that we discussed as well, among other things. So Musk talked about production timelines for those factories in the company's earnings call. I quote, he said, "I should make a point that for Berlin and Austin, we do expect to start delivering cars from those factories next year, but because of the exponential nature of the spool up of manufacturing plants, especially one with new technologies, will start off very slow at the first and then become very large." He cautioned investors that it could take 12 to 24 months even to hit full capacity at these new factories after beginning operations. Tesla previously planned to start production at the Berlin factory in July 2021. Now, this is going to be Tesla revenue by segment, obviously. So the energy, gen, and storage, services, and others, and then automotive. So obviously, you guys can see right here as, the automotive is definitely increasing a lot. And then obviously the other two are very, very small points or very small parts of Tesla. Tesla reports 5th straight quarter of profits. So obviously, if you guys follow Tesla, they were losing money for years and years. They had one and then another one right there where they were a little bit profitable, but overall they were down. Right here in 2019, we had 2 profitable quarters, and then we had 2 negative quarters, and then now finally we had 5 consecutive quarters of profit. So he said that the Cybertruck, obviously, to begin about end of 2021 if things go well. So obviously he unveiled the truck on November 21st, 2019. That's another big thing that's going to be there. So at Tesla's 2020 annual shareholder meeting, the Battery Day presentation in September, Musk said that the vehicle deliveries in 2020 would be up about 30 to 40% from last year, implying a range from about 477,000 to about 514 deliveries total. Obviously, right now, they're aiming for about 500,000 vehicle deliveries in 2020. So that's their guidance pretty much that they're predicting. He also said that in 2021 and 2022, Tesla plans to spend far more than it previously forecasted, 2.5 billion, especially on the new factories and expansions. Tesla has raised more than 7 billion in the past 7 months, and it's completed a 5-for-1 stock split, obviously. So we all followed that. The stock was trading at around $2,500 per share. We did a 5-for-1 split. Now they're worth about $500 per share. And obviously, Tesla also completed the sale of 5 billion of its common stock in September through an at-the-market offering. So that's another thing that they did. So guys, that brings us to the end. So what do I think about Tesla? Do I think that Tesla is a buy or a sell or a hold right now? Well, as you guys can see right here, I do own Tesla in my portfolio. At one point here, before August 31st, 2020, I had about my market value was about $13,000 worth of Tesla, and it was trading pretty high right there. And I sold and took my profits, and I sold pretty much all of my Tesla stock, and I waited for some opportunities to continue to buy in more once it went lower, and that's exactly what I did. So far, I've made about almost $5,000 on Tesla stock. Now that was a little bit higher in the past, but it went down. So I've made about $5,000 on Tesla stock. Currently, I own about $6,000 worth of stock in my portfolio. Currently, we own about 12.4 shares of Tesla at an average share price of $437.45. So that's not that bad right now, currently trading at $490. So we made some gains already with Tesla. In my opinion, yes, I believe that Tesla is a great buying opportunity right now. I think that this company has much more room to grow in the next 5, 10, 15, 20 years. The market cap for this company is only 473 billion. I think this stock could be a $1,000 per share company, obviously, in the next 10, 20 years. Which would pretty much, say that the market cap is about 1 trillion. I think that this company can definitely get to 1 trillion market cap in the near future, obviously, and that would double their share price to about $1,000 per share. And if we look at the pre-split, that would come to about $5,000 per share. And I think that that is totally doable for Tesla. Obviously, leave a comment below. What do you guys think? Am I right on this one? Do you agree or not? So I hope you guys enjoyed this analysis on Tesla stock. If you guys did, make sure you smash that like button. Let's get over 100 plus likes on this video. And like I said, leave a comment below. What do you guys think about Tesla? Do you think it's going to continue to roar, or do you think it's going to go back down? Subscribe to the channel for more content like this, and I hope to see you guys in the next one. Goodbye.